Welcome back to the What's More podcast. I'm your host, Quinton Harris. You're dialed in for episode 174. And in this one, we're going to bring to you some credit tips, but we're also going to debunk some myths on this. And what I'm excited about on this is that recently Vantage Score, you've heard us talk about this on the episode a couple of times. Vantage Score is the new platform that a lot of creditors are moving towards. They just released kind of a pop quiz, if you may. And I was stunned when I took it. I was telling my producer, Charlie, that I was stunned at like some of the myths that they debunked, but even I got some of this stuff wrong. That's what kind of, and I've been doing this for 20 something years. So for me, this was kind of like a wow factor, like, oh, okay, this is some great educational stuff to bring to the show today. So that's what you're dialed in for. And I have a special guest with us today. I have our intern, Nick Labyak, joining us today. I'm pretty stoked about this. Nick, UF student right now. You're kind of following us along over at the bank and kind of checking out some things on the financial side. But here's what I love about this. I get some true answers today about credit myths from a college student that's currently going through the financial system. So welcome to the show, Nick.
Thank you for having me.
Yeah, man. So, hey, you've been with us now for a little over a month. You understand the terms credits and what it means here. But like at school, like, do you guys talk about credit a lot?
No, never.
No. So it's like I think it's one of those things like we've learned that there's a disconnect, right? And it doesn't matter what school you go to. I mean, Harvard, Ivy League, UF, the SEC, Ivy League as they call it, Vanderbilt, Tennessee, whatever. It doesn't matter. You don't hear about this, right? And it doesn't matter what school, what platform, they don't talk about it. And I've always felt like there's this disconnect because in college, I think that's sometimes where some of the credit issues arise and start. So I'm excited to talk about this today. I'm excited to get your take on some of these questions. And on our air here, we're going to kind of go through the pop quiz together here and talk a little bit about it. So again, welcome to the show.
Thank you.
Yeah. So, hey, speaking of college, we're in the College World Series right now, right? And hey, shameless plug, my Vols are still in it. One game left, Charlie. One game. If they win this game, national title. First time for us ever. But one thing we know about this, in college sports, right, or pro sports, you hit a home run, that's guaranteed for one run. You hit a grand slam, that's 4 runs in, right? Touchdown, college football is worth how many points?
6.
Yeah, 6 points, a guarantee, right? Well, when it comes to our financials, it doesn't work like that, right? If I do this, if I miss this credit card payment, my points fall 10 points. That doesn't work like that. And everybody has a unique platform for their credit modeling. And I think that's the big thing to start with here. So like Nick, your credit and your credit profile is going to be vastly different than mine or even Charlie's. And what's crazy about that is it's all based on your years, your history, and then how many different accounts you have. So in your opinion, what's the most important trade line that you would have on a credit report? Now, you know what trade line means because we've been doing this for a while, but what's the most important credit for our audience? Trade line, if you haven't listened to one of our episodes before, it's actually like your credit file. So like the trade line would be like a mortgage, a credit card, an auto payment. In your opinion, like what's the most important one?
Mortgage.
Yeah, I would say so. I mean, we talk about that all the time. Mortgage, right? Because it's the largest balance, longest term, the most credit given to you. It's important. It's probably not the first one you're going to get, but definitely very important, right? It's interesting. So, Nick, are you aware of the credit card debt in America that's going on right now and how much there is?
Not the number, but I'm aware that there's a lot.
Yeah, so there's a lot. So here's the number. Number's $1.1 trillion, highest on record, right? And there's this theology that it's not all going to get paid, right? So we're kind of thinking about like how are Americans who are faced with difficult financial decisions, how do they come about when they can't pay their bills? And sometimes that happens, right? It doesn't matter what position. You could lose your job and be in a bad position. You could be riding great, right? And then something happens, right? An impact to the household income. And it could be a loss of job, right? So if someone can't make their payment, the question becomes like, what do they do? And in my previous shows, I always said, reach out to the creditor and work through that with them. And I'm still going to stick with that because I think that's the most important thing you could do. Because if you reach out to the creditor, let them know what's going on about your circumstances, maybe they may even pause your payments for you until you get back on your feet with your job. But if they don't know what's going on, they're just going to think you're arbitrarily not making the payment, right? So one of the things I want to talk about here was this little quick quiz, if you may. I thought this was interesting. So I'm going to start with this. These are all hypotheticals, by the way, right? And know that every scenario is different, but I love this, though. I love what they do here because I thought this was pretty good. So again, this is from the Vantage Score 4.0 model they just released. So just for the record, the lowest score you can have on a credit report with Vantage is 300. The highest is an 850, right? That's the highest you can get on this. And this is a compromise of all the different repositories, Experian, Equifax, and TransUnion, right? All right, so Nick, here we go. Quick answers here. So, hey, if you recently missed a car payment, okay, you obviously have an auto loan that was taken out in the past year, and you also have a new credit card that has a limit of, let's say, $5,000, and you're at your limit, right? So you're at your limit on your credit card, but then you also have an auto loan, and you've missed a payment on that auto loan. So if you had to pick one of these, which one would be the least impact to your score if you missed a payment, the auto loan or the credit card?
The credit card.
Yeah, man. Dude, you nailed it. That's that's pretty good because I honestly don't think I would have got that right. But the credit card drops your score. You ready for this, Charlie? Drops your score 100 points if you miss that payment. 100 points compared to the auto that would have dropped at 25 points in this Vantage Score model. I thought that was interesting. And I think the reasoning behind that is that you had an established pay history with the auto account, right? It's been established, you've made payments. And so there's almost like this forgiveness level that if you miss the payment, right, it's not going to be damaged because you have such a thorough history of making the payment. But on this credit card that was maxed out, if you miss the payment on a maxed out credit card, it almost looks like you're being negligent because the card was maxed out. Does that make sense?
Does.
Yeah. So, I mean, why aren't we talking about this kind of stuff and educating people with these kinds of, tools you may, if you kind of go into this. So, go into this. Here's the second question, Nick. You ready? Here we go. By the way, I did not think you would get that right off the bat. If you go 6 for 6 here, I'm going to be impressed. All right. So here we go. All right. You have a $475 balance on a credit card with a limit of $500, which means it's almost maxed out, right? And you have a personal loan with $2,000 and you owe $1,300 on it. Both accounts were open in the past year and a half, so you have depth on both of them. And the credit report shows one missed payment on a personal loan, so you have one missed payment on that personal one there. The question would be, if you had to miss one of those payments, obviously you don't want to, but if you had to, which one would be the least impactful to your score, that credit card or the personal
loan? The personal loan.
Okay, this is. Are you reading? Have you already taken this test?
I've not.
Okay, so you got that one right too. Personal loan would have impacted at 22 points, where the credit card was at 71 points. I'm starting to see a theme here that if you have established credit, right, there's a little less forgiveness on the credit card side of things than there is on the installment side of things. Yeah, why do you think that is, Nick?
I think it's because if you have that history, you know that you're good for the next one.
Yeah, I would tend to agree with that. Yeah, a little bit of history, a little bit of depth there. But I would say this, that even though the balance on that personal loan is much higher than the credit cards, missing a credit card payment still has the highest impact because neither account in this particular case has a clean payment history, right? So you had one that had a clean payment history, which was the credit card, and then you had a personal one that didn't, and then obviously you just took the other one that was clean and no longer made it clean. So it's kind of interesting how that works there. Again, stuff people really don't get a chance to hear about. So all right, here's another one here. So, hey, you take out several loans, all types over the last decade. So 10 years, this means you have 10 years of credit depth on here. And you're behind on payments on all of that except one personal loan. So you have multiple accounts from auto, mortgage, housing, credit cards over the last decade, and you're behind on them right now, right? And here's the thing. If you could choose one of these, right, if you had to miss one of these, which one do you think would have the least impact to your score if you had to miss one?
The personal.
Okay. So in this case, it's actually going to be the credit card again, right? And it's interesting because they're saying that the score declines on each missed payment scenario, but in this revolving debt scenario, it poses a higher level of risk. So here we are halfway through this quiz, if you may. Are you starting to see a theme? What's the theme?
Credit cards.
Yeah. And what I'm seeing is a theme where credit cards are maxed out, a theme where credit cards are higher. Now, remember, the whole premise of this actual test was that, hey, listen, we have the highest level of credit card debt in the nation, right? There is this theology that it may start to default. There is this theology that payments start to be missed. We're already seeing an incline in the actual amount of delinquencies on credit cards. Actually, the highest level right now that we've seen in quite some time, and it's rising rapidly. So I think the whole point of this test, this model, was to educate people that, hey, listen, credit card debt, it's actually going to impact your score greater than you think. And I think the ideology of, hey, I just won't make the payment, I think they're trying to prove a point here. And I'm seeing it halfway through here. So to me, it's like, okay, makes sense. So let's run through a couple more here. I think that are kind of going to turn things around here a little bit here from what I saw, just in the form of maybe the myths and the theologies here. But hey, you just came into some money and you want to pay off some of the debt. Now, this is popular. We see this all the time. Some people online say, hey, just pay your credit cards out, close them out, right? And we've talked a little bit about that. But some people run into some extra dollars and decide they want to pay down their debt. In this case, you want to pay off your debt in full and maybe invest the rest. So you have a credit card with an $1,800 balance with a $2,000 limit, and a car loan with a remaining balance of just shy of $10,000, and a mortgage with a balance of $100,000. Now, I don't know how much money you run into in this scenario here, but let's just assume it's enough to pay those off. Which account should you pay off for the biggest credit score boost on your credit?
The credit card?
Yeah, absolutely. No doubt. And we know that because, right, it's close to the max balance. You pay it down, all of a sudden, it's going to be a big win here. Now, trick question. Would you pay the card off and then close it out?
No.
No. Why would you not close it out?
Because they want to see you keep that line of credit open.
Yeah. Now, did you know that before you became part of the internship over at our office?
I did not.
Yeah. Because it's interesting because you would think, hey, I pay it off, I want to close it out, right? Makes sense. But to your point, that depth is really important, right? And I think that that's something that, we talk about and really harp on all the time because it is a misconception, right? And it does kind of end up hurting there as we're doing things. All right. Last couple here. So, hey, you open up one credit card and a personal loan within the last 2 years, and there's no history of missed payments on either personal loan or credit card, right? So it's clean history on both. Which one is going to hurt your credit score the most if you don't make that payment?
Credit card?
Okay, trick question. Both of them are going to damage it the exact same, right? Because they're both clean history, right? They're both going to decline at 84 points on this, right? And so I think that's interesting. A missed credit card payment, a missed personal loan payment. What I see there is if you have a clean history, that first one cuts the deepest, right? That first cut is kind of the Sheryl Crow, but the first cut is the deepest on this one because it is a clean history that now has been damaged with a late payment, right? And so all of a sudden it's like, whoa, what's going on here? Is this a trend? Is this a one-off? We're going to hit the credit score at 80-something points. That's a big deal, right? So if you have like an 800, you just fell down below a 720, right? And that could be a big thing because one thing we know is like certain scores help you get to the best interest rate on not only mortgages, your cars, some of the best insurance policies, getting hired at a job. All of that is important in this credit bureau depth, and sometimes it's overlooked. So I think that's something that a lot of people fail to look at as well. All right, last part of this quiz here. And by the way, you're pretty much what? I think you're 4 for 5 at this point. Pretty impressive. All right, here we go. You've taken out numerous loans over the last 2 decades, and you've never had a missed payment at all. So 10 years, no missed payment. Credit report shows you have a 9% total available credit, meaning that you've only, or 9% usage of available credit. So if you have available credit of, let's say, $20,000, you're only using $1,800 of it, right? Follow the logic here? And there's been no recent inquiries. No, meaning you're not shopping for additional credit, right? So if you're going to miss a payment, which one has the least impact on your credit score? Credit card, personal loan, auto loan, or mortgage?
Would it be all of the above too?
Close. I like that. Hey, when in doubt, guess them all, right? So yeah, actually, believe it or not, because it's a clean history, right? This goes back to something we've talked about before. So what's the most important trade line on your credit report?
Mortgage.
Mortgage, right? And then the second one's going to be an auto because it's usually higher than down a credit card. If everything's clean, we talk about this all the time. If everything is clean on there, what's the one you don't want to miss?
The mortgage.
Exactly. In this case, this mortgage is a 111-point hit if you miss that, right? If you miss the auto loan, 111-point hit. You miss the credit report or the personal, 111, credit card, 83. You're almost right with all of them, right? You're 3 out of 4 there, not bad. But that's important because it shows all of a sudden there's an issue brewing on there. And what, we always talk about make your mortgage payment first, especially if you have clean debt history before you take on any other additional risk there here. So as we work through this here, how credit score works. Now, we had Tracy King on the show who actually runs a credit division, and she kind of did a really good job of breaking down how this works. And one thing she taught us on this show was it starts with usage, credit usage, and what type you have, right? The number of accounts, and then how you maintain pay history of those accounts, right? And then how you use those accounts, and then are you shopping for additional? It's almost broken into 4 different segments. And I thought that was interesting because she opened up some conversation that you just don't see a lot out there on the news. But I thought that this particular Vantage Score kind of bridged a little bit of that gap of that conversation there. And I'm going to have Charlie put this actual test or a quiz, if you may, on our YouTube channel. What's your one more with the number one? If you're not subscribed to that, subscribe. This will be available to you. Charlie put that on there. You can take a look at it, kind of get a chance to run through this because I know we're doing it kind of quickly here. But go through it and see a little bit about yourself. So, hey, Nick, what's a takeaway today for you? Like something you've taken away from this or just in general about credit during your time with us over here at Bank of England?
It seems like you want to maintain the clean credit report and to not start with a missed payment on one that doesn't already have one. Yeah,
I mean, that's definitely it. No, hey, listen, coming out of college, we talked a little bit about this here, but what's something you've learned about credit cards thus far coming out of this internship and while you're at college?
That interest rates are high.
Yeah. Yeah, no doubt.
On the credit cards, and they can screw you over pretty quickly.
Well, yeah, and I mean, let me kind of back up. They can screw you over if you can't be responsible with them, right? If you can't maintain certain things, it's compounding interest that gets you in a deep hole there, right? So, all right, last but not least on this. So when it comes to credit history and it comes to credit depth, right? And we talked a little bit about that. What advice would you give to someone, let's say just turning 18, 19, 20 years old, about getting started on their credit history if they haven't done that already?
To open up a student line and then start building a good history, putting a little bit on it, making sure you can manage it and pay it off.
Talk to me a little bit more about that student line for our audience here, because that was something when you and I were having a conversation, it was rather new to me. What do you mean student line?
So if you're a university student, I know Discover does it at least for sure. You're able to get automatically approved even with no credit history to a credit card. So I've been using it for over a year now.
Nice. Excellent. So, hey, for our audience, if you have kids at home, right, and they're 18 and they're going into college, their student line set up, and you heard Nick just talk about Discover. We'll put that link in our YouTube channel as well. But I think these are really incredible options. One thing I want to add to that was if you're a parent and you have the opportunity to do this, maybe at the age of 16 or 15, add your child as a an additional user to the account, right? An authorized user, because now they're going to get their own credit card with their name on it. They're going to start building additional credit depth with the history that you've already provided on your credit as well. And now you've kind of got a head start going into that. So when you do turn 18, you got some depth and some decision that can be made there. But if you're in a situation where you can't do that, I love what you just said. The student line's a great opportunity. And I think it's something you can take advantage of. And, there was a time, if you wait too long to get in the credit report, you get the old adage of, well, I would love to approve you, but you don't have any credit, right? And so I think starting at 18, and you made a great point, using it, paying it off, being responsible with it, learning how to make it work for you. That's a great piece of advice. So thanks for sharing that on the show today.
No problem.
Hey, Nick, thanks for being on here. Always great, getting a chance to kind of bring new people to the show here. And man, you did a great job today. I appreciate that. And I still think you may have read this quiz before I did it, because you got 5 out of the 6 there, which is pretty impressive. So guys, if this benefited you at all and you're sitting down with someone, you're like, you know what, I know someone that could use this, or hey, listen, that was some great pointers there at the end about how to get a student line and how to work within those channels. Hey, share this podcast, 5-star review. If you would, check us out on Apple and Spotify. We'd love to see your reviews. More importantly, on YouTube, if you would subscribe, leave some comments. That stuff on there is really important to us, and it definitely helps us with the next episode. And so, guys, thanks for tuning in. Nick, thanks for being on the show.
Thank you for having me.
All right, we'll see you the next episode. What's your one more?
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put my all into it, yeah.